Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. It's on Zillow and the fact that they are still saying that we are not in a housing market bubble. They've actually done a survey from professionals that are saying there's no way we're in a bubble. Yet, here's the thing. We had a 32% nationwide average equity surge in less than 2 years. And obviously wage growth did not go up 32%. So in essence, that equity surge broke so many fundamentals. It is outrageous to think that we are not in a housing market bubble. Fannie Mae is warning about it. Freddie Mac is warning about it. More companies are warning about it, but yet some people are still clueless. Why are they clueless? I have no clue. I don't know why they're clueless, but they're clueless. And I believe it's possible, actually, that it's companies like Zillow that continue to act clueless on the direction of our housing market. I also believe a little bit, companies like Zillow are a little bit at fault for spreading the fear of missing out by giving inaccurate projections on the direction of our housing market. But we're going to deep dive into an article from Zillow right now titled "Housing Market Hot but Not in a Bubble, Economists Say." Y'all know this article was actually really hard for me to read because I believe it's completely ridiculous. I think it's a false narrative, and I do not know why that Zillow continues to be overly aggressive. They've already demonstrated they're not accurate in their projections, right? So why continue to be inaccurate? Why not shift and start helping people, start sounding the alarm? Like, what do we do as we're waiting? What do we do? What's going to happen in the market, right? They're a huge company. It is what it is, guys. But remember, I'm not a financial advisor, even though my bio is as a realtor, loan officer, and instructor. But this is just my YouTube channel. So please, guys, please like the video for me. Subscribe to my channel if you haven't, and comment below. Let me know your feelings about Zillow, and let me know if you think that they're being accurate. But let's jump into this ridiculous article and see what Zillow is saying right now. You guys, this is absolutely ridiculous, but read this. 60% of housing experts polled by Zillow. Okay. So my question is housing experts, like, what qualifies someone for a housing expert? To agree with Zillow? If I agree with Zillow's narrative, am I now a housing expert? Like, who are these people? But anyways, 60% of housing experts polled by Zillow don't believe the housing market is in a bubble, compared to 32% who do. Again, you guys, 32% equity increase in less than 2 years. How are we not in a bubble? Okay. I mean, this is shocking. The panel expects to see a short recession by 2024 as the Federal Reserve works to tame inflation. The panel raised home growth forecast in 2022 as demand stays strong. That's ridiculous. Demand is not staying strong. Although home prices continue to break growth records, a panel of housing experts and economists surveyed by Zillow does not believe the market is in a bubble. This is insane. This is so hard for me to read. The latest Zillow home price expectation survey polled more than 100 experts from academia, government, and the private sector to gather their opinions on the state of the housing market and future growth and inflation forecast and recession risk. Of those surveyed, 60% said they do not believe the U.S. is in a housing bubble, 32% think that we are, and 8% are not sure. How are 8% not sure? I thought they were experts. Y'all see my point? Like, what is this nonsense? Okay, so do me a favor, guys. Comment below. Let me know if you agree with me that whoever these experts are completely delusional and they probably have some type of false narrative. And why do 8 of these experts not say anything? Why not get 8 different experts that will give an opinion? You see, who are they getting this data from, right? Why is... You guys, this is just really hard for me because Zillow is doing us an injustice, and I will not personally soon forget it, right? But let's continue reading this article and check out where they're getting this information right now. Okay, you guys, check this out. This is insane. So this is going to go over the percentage of people. So the first one is recent price growth. Okay, first of all, listen to this ridiculousness. You guys, this is completely ridiculous, but let's read this. So 32.5% said recent price growth can be explained by fundamentals. Jeez. So again, recent price growth can be explained by fundamentals such as demographics, shifted housing prices, and scarce inventory. Okay, Interesting. What about cheap free money? That's not in there. Or quantitative easing, right? Or super low interest rates. That's not in there, but whatever. So let's continue. That was 32.5% of these experts, by the way. So the next one is credit risk remain low due to the sound underwriting and mostly fixed rate fully amortizes mortgages. So 30% don't think that we're in a bubble because we have strong mortgages. But the thing is, guys, we're talking about accelerated equity growth, not mortgages. We're talking about a bubble, not mortgages. Crazy, right? Let's continue. The term bubble implies a subsequent crash, and that is not likely to be one soon. So 26% of people don't think we're in a bubble because we're not going to be in a crash. You see the whole definition of crash? Like, what's the definition of crash to them? I need to understand that, right? Because the definition of crash varies so ridiculously. People hide behind definitions. The last section is in real terms, home price growth is high, but not excessive. So 7.8% said home price is not excessive. Do y'all believe this? Can y'all believe? Can y'all believe the reasoning here? All right, the article continues. The most popular reason respondents rebuffed the bubble thesis was strong market fundamentals, including demographics, scarce inventory, and shifting housing preferences. Low credit risks as a justification followed. Due to sound loan underwriting and the overwhelming share of fixed rate full amortized mortgages, another large group of respondents rejected the term bubble, which implies a subsequent crash they do not believe is imminent. Among those who believe we're in a bubble, unaffordable prices in the absence of record low mortgage rates is the chief rationale. So the people that are being intelligent, in my opinion, are saying that it's in a bubble because we don't have super low interest rates anymore, right? Let's continue. To be sure, the housing market is incredibly hot. Home values in April are up 21% over last year, marking the 13th consecutive month of record-breaking annual home value appreciation. Affordability is greatly suffering too, as the astronomical rise in both home prices and rents over the last 2 years coincides with a more recent hike in mortgage rates. However, an extremely hot market does not necessarily mean we are in a bubble. But I would say the astronomical rise in home prices does. They saying astronomical rise in home prices. Astronomical rise in home prices. Come on, guys. Come on, we're talking about equity growth, right? Although Although a recession is looking more and more likely, the housing market today is far different beast than what we saw in the mid 2000s. Unlike in 2006, the market is underpinned by strong fundamentals and has unbelievable and has been built on mortgages with sound credit factors that won't change in the near term. Here's the thing, guys, they forgot the biggest fundamental of all: wage growth. Why leave wage growth out of the fundamentals, right? Why leave that out? That's what we're really talking about: wage growth compared to equity growth. Yet they left it out of their survey, or they just decided not to talk about it altogether. So who the heck are these experts? I'm starting to think expert means you're greedy and delusional. Does that make you an expert? Is that where we're at in today's society in the housing market? This makes me upset, you guys, because there are people that believe this with all of their heart. Anyways, let's finish out this article right now. Now it goes into recession. When will the next recession hit? While the panel largely does not believe the housing market is in a bubble, it does foresee a recession coming soon. The largest portion of the panel, 45%, said that the recession will begin in 2023, which gathered more votes than 2022 at 30%, 2024 at 8%, 2025 at 17%. So at least 30% think that we're going to be a recession in 2022, but most of them believe in 2023. Now, I believe we're in a recession right now. So the recession, I believe started actually in Q1. 6% believe that same thing. I originally thought the recession would happen in Q3 of this year. It still might, but the reason why I'm saying we may be in a recession right now is Q1 already had negative GDP, and more and more numbers are coming out from like Target and Walmart and companies like that, and tech sectors like Teladoc and things. They're suffering. They're losing a lot of money, right? So I think that we're in a recession right now. But let's read some more points in this article. Although the Great Recession of 2008 was triggered by a housing crash, it's a relative outliner to the grand history of recessions, which have often strengthened investment in housing due to its relatively stability as an asset, which is not the case right now. Can the Fed thread the needle? The Federal Reserve is working to strike a balance between two mandates of reducing rampant inflation and avoiding a recession. Those polled by Zillow are skeptical that this soft landing will be achieved. A 56% of survey respondents do not expect the Fed to materially reduce inflation while averting a recession. The remaining respondents are clearly split, with half believing that the Fed will successfully avoid a recession while reducing inflation, and the other half who are not sure. How are these experts not sure? Get some different experts. Come on, Zillow. Geez, do they just need that to make their graph more colorful? I don't understand. Why not get an expert that can talk about expert things? Anyways, home price expectations still rising. Despite a more than 100 basis point increase in mortgage rates since the previous survey just 3 months ago and the potential for higher rates in coming months, the panel's expectations for a 2022 home price appreciation still rose to 9.3 from 9% last quarter. This would be a significant step down from the 19.6 appreciation observed over 2021 calendar year, but still high above long-term historical averages. So, you guys, we have a record 40-year high runaway inflation from, in my opinion, quantitative easing. Do you really think that we can handle this situation without being in recession? Do you guys even think that we're not in recession right now? I want you guys to comment on recession, comment on what the Federal Reserve is doing. I mean, you guys, this is absolutely crazy. So, why not lean with caution? I don't understand the continued aggressiveness from Zillow. Sound the alarm, you guys. Help some people out. Because, again, what if you're wrong? If I'm wrong, people are just building their credit. They're saving their money. They're investing wisely. If they're wrong, people crash and burn and go into foreclosure. Do you see the difference here? Anyways, you guys, I'm super frustrated with Zillow. I'm super frustrated with these companies continuing to attempt to be optimistic in the face of overwhelming data. But it is what it is, you guys. So continue to do your own thinking, continue to do your own research. And I really appreciate you watching this video with me. And as always, you guys, if you're out there investing in real estate, I do wish you luck and I hope you win.